From the morning reading, stocks pause as the spider tests Friday's breakout with light volume. Oil rallies as energy leads. 4 of 9 sectors moved higher on Monday. XLE, XLB, and XLI were the strongest sectors, while XLV was the weakest sector. Oil futures rose 89 cents to close at 42.87. Breadth weakened as advancers led 1665 to 1288 on the New York Stock Exchange versus the prior session, and decliners led 1410 to 1226 on the Nasdaq. On the S&P 500 snapshot, another lackluster session. On a day of light economic news, the S&P 500 traded in one of the narrowest intraday ranges of the year. To be specific, the fourth narrowest of the 151 sessions so far in 2016. The lackluster session is a bit curious given the strong day for equities in Asia, modest gains in major European indices, and a nearly 3% pop in West Texas crude. The index closed with a fractional loss of 0.09%. The closing yield on the 10-year note remained unchanged at 1.59%. Hello, this is Stephen Harris, the head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial interests. It is 6:37 a.m. Mountain Time, and I am recording this in preparation for the market day of August the 9th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Let's go ahead and bounce into the morning report. And at the time of this cut, all 4 of the U.S. broad market indices were up just above scratch. Crude oil is up about 0.5%. Euro is down just below scratch, as is long bonds. The gold is down about 0.25%. The China and overseas actions up about 0.75%. Hong Kong down just below scratch. Japan up about almost 0.75%. Germany up about 0.75% as well. And United Kingdom up about 0.33%. In terms of macroeconomic reports for today in the United States, of note is non-farm productivity and labor cost. At some point, there's going to be a report coming out about mortgage delinquencies. It's not defined as to when that report's going to be released. Now, looking forward to tomorrow, we have JOLTS job openings, the weekly crude oil inventories, a 10-year bond auction, and that appears to be about it. So a bit of activity for today and tomorrow in terms of the macroeconomic report side. In terms of volatility, obviously we've been continuing to have a super low volatility. Short-term VIX is at 10.10. Skew has been climbing. It's up to 132.94 now. So that's a bit of a warning. IV percentile for the S&P, a very, very low 4. The Russell 1, NASDAQ, and Dow also a 1. No standard deviation moves were put in yesterday on a close-to-close basis across the 4 broad market indices. In terms of the charts, we'll focus in on recent action. Of course, we had the long, about 13 session range-bound activity, and then we had the bull flag that confirmed both a kind of diagonal and a horizontal breakout. But then since then, we had an intraday high that was tickled in, but not much to speak of with respect to S&P futures yesterday, and so far action today also doesn't seem to be going anywhere at all. So while this was a very strong signal on Friday across all 4 of the indices, so there hasn't been much more to build on it as of yet, and that's a little bit concerning. It was a big candle that we might digest a little bit for a day. Certainly that's true. But, we're starting the second day, and we're still, overnight action last night was very, very small. So this is starting to become a bit concerning that this may be just kind of a false breakout and then drop back into the range. Of course, yesterday you also had with the Dow similar action. You ended up with this small little doji, and of course this yesterday would be this candle here. This is last night's action, but very, very small range action ever since we had the breakout day on Friday. NASDAQ, very much the same. You had a little doji action with an intraday high that was tickled in, but didn't build. It kind of got rejected. And thus far, last night's overnight action also very, very anemic. On the Russell, very much same action. We get the breakout and then intraday high, but closed with, a doji. And then so far, last night's action, very, very anemic. So let's go ahead and see if any of the other markets are doing anything. Crude oil last night not doing much. Gold also not doing much last night. And bonds, perhaps a bigger candle on bonds, but nothing significant. So really very, very anemic action across almost all these markets in the overnight. And of course, not much to say about yesterday's action. As you heard one of the morning authors mention, one of the narrowest range days in the S&P that we've had in the trading year. Volatility getting exceptionally low, and it looks like we're trying to get even lower so far today. So we continue to kind of drop on the volatility. So I don't think there's much more to add to this. Just the charts haven't given us any real significant new information in the last 1.5 days. Very, very anemic volume and action. So we're basically left with the last significant action, which was significant breakouts from Friday across the 4 broad market indices, but not much since. So I think the primary question now is do we start to slowly but surely build on this breakout and start to get a bullish leg, or do we fall back into the prior trading range, and which I really hope that doesn't happen. I'm so tired of trading ranges lately. Anyhow, do we fall back into the trading range and then just kind of go sideways, and this just ends up being a little poke action that didn't really amount to anything? So we need to have the institutions come in with force and buying volume to really support these continuing higher highs. I mean, we have price action is the most important thing, and we have had higher highs and higher lows, but surely has not been, the stamp of approval by the large institutions by any measure. So we'd love to see a little bit more emphasis and an emphatic statement by the institutions. So that's enough on the charts. Let's go ahead and go to the daily report and some subtle changes here. And this indeed is the story that we usually have from one session to another on these reports, is we look for those subtle changes. We look for those not just changes, but also the rate of change. And that's where we are. Bullish across most of the upper indicators here. Market trend intermediate term phase opinion is a bullish. Phase 3 bull flagville is the expectation. In terms of the 3 market timing signals, IBD confirmed uptrend, GMI index 6 out of 6. So perfect there. Buy signals at 7-1. Stock charts, decision point scoreboards. A bit of mixed signals that we're still left with. In terms of short term, we've had several bearish signals come in, giving us kind of mixed signals, and we're also on the long term with mixed signals. Even the intermediate term, if you look within, there's some degradation that's occurred here. So these aren't as strong as they might appear. And indeed, while we do have a consensus here of bullish signals, there are some kind of patches of thin ice, as it were. So just kind of keep that in mind. And that is characteristic of this sideways action. It doesn't give you much confidence in bull or bear when you've got this kind of prolonged sideways action. Nor should you have confidence in a posture that is bullish or bearish at this point to an over degree. Position sizing opinions are both at 100%. Remember, those are mechanical signals. Intermediate term market postures are very, very strong, and certainly this helps the case that we should be with a bullish bias. And they are supported with a bullish sentiment line. Strength of the trend is still very strong. Hedge warning status still level 0 plus, normal with some cautionary aspects. On the strategy opinions, I did take one subtle change here for the option income strategies. I'm now calling this borderline acceptable. With the VIX down below 12, the amount of premium that's received versus the risk can make this somewhat trickier. So this isn't the same thing as having really high volatility, and clearly that's much more difficult for novice traders to handle with their option income strategies. But really, really low volatility has its own kind of set of problems, and most notably that you just aren't getting paid much to take that risk. So you end up going in closer, and then when volatility finally expands, it's really easy to get run over and have that small risk premium just not seem to line up with the amount of actual risk that you might be taking. So just kind of keep that in mind. Cover call strategies and put selling did not make any changes here. These are both considered to be acceptable to initiate new positions for novice traders. In terms of the specific warning areas, still the same 3 warning areas in the volatility group. You have this volatility ratio warning that is, in the reset area, waiting a firing signal, has not yet fired. Same thing with the daily squeeze on the VIX futures, waiting a firing signal. And then skew also has become somewhat elevated and has been climbing in recent sessions. Roughly a 10% probability right now of a 2 standard deviation move in the next 30 days. Trend-based, everything's fine, hunky-dory there, good, strong signs. New York Stock Exchange over for 300 yesterday, came in at 453. One thing I will note, the key intermarket risk aversion indicators, this is a change from yesterday. They're all 5 in the risk on posture, but note that these signals, they went kind of risk off and then back to risk on, and the lines are just the smallest little wiggles with this sideways action. And you're seeing this in these indicators as well, and just small little bumps turn these up or down. So this is a very, very, very weak signal, but it is of note that they did all turn back to risk on. From a sentiment indicator, we have an 84. This is up in the upper quadrant and nearly as high as this indicator generally ever gets. So kind of keep that in mind. But just because you have high sentiment, as we always caution, doesn't mean that you're about to drop. This can remain high for extended periods of time. What it means is watch for reversal signals. In terms of market postures across the sectors, you can see that there's a number of sectors that are weak. Mostly the defensive sectors, our stubs, our consumer staples, our utilities, our telecom, are all, in the weaker postures in the short to intermediate term. So kind of keep that in mind. That could be argued that that's actually a good sign, and that money seems to be coming out of the defensive sectors and into the higher beta areas. And indeed, you see yesterday's performance, energy, materials, and financials, all higher beta areas. But other than energy, with that big move from West Texas crude, really pretty anemic action across most of these sectors, with only healthcare to the negative side and energy to the positive side really making any kind of significant move at all. Okay, I think that's probably enough for today. Let's go ahead and wrap this thing up. Let's get to the disclaimers. As always, remember that you can always hit the pause button if you need more time to review the disclaimers. Also, note down here at the bottom the hyperlink that takes you to the full set of disclosures. We'll see you back here for the next trading session from Falcon Global with our market preview. In the meantime, manage that risk, and you'll see that everything else falls right into place, and you'll have good, consistent profits. Go learn something, and good trading.